Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for October 29, 2023. I hope you guys and gals are having a great weekend, and let's all pray for peace. As we go through the weekend, obviously you need to be looking at the headlines in Israel. That's obviously going to have an effect on how the markets reopen on Monday. We always have to keep that in mind, or at least in this current environment. So it's I'm not going to rattle off any headlines right now because they can change really quickly. So just make sure you're monitoring what's happening around the world, especially if you have open positions. Now, we're going to have a really busy week next week, so I just want to get right into it. And I'm actually going to start going into the equity markets. But before I do that, I need to mention just a few things. So we have the BOJ, we have the FOMC, and the Bank of England this week. We have probably the most important earnings of this next week is going to be Apple, and that happens on Thursday. But like I said, I think we need to start with the equity markets because they closed on the lows, and that's going to be really important. All right, so as I go into the charts, I just want to say, obviously we've got rid of the discounted pricing for Forex Analytics, but guess what? You can actually take a trial of Forex Analytics. It's $1 for 10 days. $1. You have 10 days of access. Make sure you download the mobile app while you're doing it, so you can access our analysis chat rooms through a mobile app as well. Even though most of us use desktop computers when we're trading, but I know a lot of you guys and gals are on the move. So make sure you download, like I said, the mobile app when you try out Forex Analytics. All right, so we're going to get into the markets, and this is the Forex Analytics app. You could go through your live charts here if you wanted to do that as well. Or you can actually go through the analysis right here, basic technical, candlestick, whatever analysis you want to go through and look through the charts. But what I'm going to do is I'm going to go into live charts. And like I said, I need to start off with a few really important things. The equity markets closed on their lows. It looked like the potential hostage exchange between Israel and Hamas, went bad. And Israeli forces continued to, escalate things as we went into the weekend. And you can see what happened with gold. Gold is strong. I know we've talked about it over the last couple of weeks about how strong it is and how pullbacks are very minimal. If you listen to the the face show every day, where you hear not only from me, but you hear from the Forex Analytics team, we've been talking about gold pretty much on the daily. Talking about how shallow the retracements are and how much it just looked like it was about ready to press above 2,000. We actually closed above 2,000. And, when you have shallow pullbacks like that, it just seems like we are going to make another move. And that we did at the very end of the week. So just keep that in mind as we're looking at, gold. Gold closing at the highs. You can see equity markets. Let's talk about the S&P here. They closed at their lows. Now, I want to show you a couple of key characteristics about this chart just so we can discuss it. Now, remember, I draw on these charts for the week ahead videos. I don't go through and readjust everything. I try to do it with you. Sometimes we have to delete things because this is like a mess from last week, things I was drawing. But I want to show you something specific about this chart. Let's get rid of this triangle here. Not relevant right now, because we obviously broke down. We broke down below channel support. You guys can all see that. Let me get rid of this green line because we ended up breaking down and staying below channel support, and we broke below 4,200, which is a big deal. This 4,200 level, as you all know, it was a big deal. 200-day moving average. We couldn't get back above the 200-day moving average. We got to sell off. So the question is, how much further can we go in this sell-off? And I think I have some answers for you. All right, first of all, let's get rid of this Fibonacci extension because it's not relevant right now. Now you might go, okay, well, can't we draw a Fibonacci extension like this? Yes, you can. That's going to take us to 40.50. Why does that seem doable? Well, I'll tell you why it seems doable, because if you take this high to low, and you'll notice we only went to right here. Let me move this over really fast. Okay. All right, you see that? Okay. We had a 50% retracement. And when you stall like that, and you have a fairly shallow retracement, it just tells you that the resumption is probably going to be to the downside. And in this case, you can do an AB equals CD move. Let me duplicate that. And that takes us down to 4,000. So, can we reach for 40.50? Sure. Can we go even further? Yeah, should not be much of an issue. Now, if you say, well, can't we do a equal leg move like this? And the answer is yeah. So that takes us to 40.50 as well. So when you start looking at downside targets, and you think about this longer term move, you got a 50% retracement, and 4,000 would take us there. Now, Benedict in our chat room brought this up, and also Nick Groves, one of our new Forex Analytics team member, talked about this last week, and I'm just going to show you. This is a cup and handle pattern. Now, if you go, okay, well, that's a cup and handle pattern, that means the target will be 40.50, right? That's how you would draw a target of and that's a rudimentary one, but that's okay. You get the gist of the cup and handle, inverted cup and handle pattern. So everything that I can see right now points us towards these levels, whether it's 40.50 or whether it's 4,000. That seems like a very logical place for us to stop over the course of the next, week, 2 weeks. Will we get a bounce from there? It's possible. You have to take into account what's happening in order to get a bounce. I don't know if I would be betting on that, but what I would be considering doing is if you have short risk positions, meaning let's say you're long gold, you're long the dollar, you're long yen, you're long Swiss francs, maybe you've got long bonds for whatever reason because you're like they're a great value. When we start reaching for 4,000 or 40.50 in the S&P, if we make it down there, that's when you have to start looking at those positions that you're defensive with and saying, do I really want to hold on to them anymore, or do I pare some back? So think about risk management risk and trade management. Should we get back down to those levels? Okay, I'm going to continue on. So it's not just the S&P that has some downside targets. I want to show you a chart that we haven't seen in a few weeks, but you know exactly what it looks like because we talked about it here. Take a look at the Russell 2000. Now, the scary thing about the Russell 2000 is this double top that you see here actually has a really ridiculous target. And I'm not going to talk about it right now, but what I will tell you is the head and shoulder pattern did complete, and we're at really critical support. Now, if you think about where we're at as far as the Russell 2000 goes, there's still a lot of downside from here. And what I would actually be doing, and let me get rid of this Fibonacci here, and I'm going to do it like this. Let's take a look at this entire range. Since we were trading more in a range, right? You can't go backwards and look like that. You shouldn't anyway. You could go like this and say, okay, well, there's the lows, there's the highs, right? The 161% extension, you notice we have double tops, or, you start looking at range extensions. It takes us a lot lower than we're currently at. It could, take us all the way back down to where it all started post-COVID lockdown, to be frank. Because if you look at a range, just a simple range extension, and I'm just taking that entire range, we're talking about a move back down towards 1,200 in the Russell 2000. Now think about that. From 1,600, where we're currently at, to 1,200, what kind of a haircut is that from a percentage standpoint? That's probably another 25%. Yeah, it's about 25% from where we're currently at. So just think about, the implications of what we're seeing here. Because when you look at the Russell 2000, you're like, wow, how about if that happens? What is that going to do to the S&P? What is that going to do to the NASDAQ 100? What is that going to do to, the Dow? One of the things that, if you've been watching the face shows, remember, if you don't know how to get to the face shows, I'll take you there right now. You just go to our webinars tab, and you have the flow show, which is the European show. It's free. Then we have the face, well, the Morning Edge. That's our morning show for Forex Analytics subscribers. Then we have the face show, which is free, and you'll see myself and the rest of the team there, or some of the team members there on face. Look, one of the things that we've been discussing this last week is you see earnings and you see companies beat, and a lot of these stocks, they gap higher because earnings were better than expected. But what happens? They end up selling off. So that price action that you see in the market is really quite bearish. All right, so you see the S&P, you got the Russell. Take a look at the NASDAQ. This is the one thing that does concern me a little bit, and especially when you have, I say concern me. Let me rephrase that. One of the things about the NASDAQ 100 is we are at support. And don't forget, we have Apple reporting on Thursday. So this could be viewed as a flag or a descending channel. You'll notice that we're approaching this is a 38% retracement. This is the risk, in my opinion. People are buying NASDAQ, they're buying big tech because big tech has done better. They've done a lot of cost cutting, and people are viewing big tech as kind of they make money. A lot of these companies make money. So I'd rather park my money there than in some other names around the market, whether it's in the Russell 2000, maybe some of the Dow stocks. I'd like to be in tech. It's weird. Tech used to be more of a high beta play. Right now it's being viewed more as a safe haven type of play. But all that could change because you look at this chart and you look at the 200-day moving average, which is that big fat red line that's ascending, right? We're on it. You see this breakout point right here. It coincides basically with the 38% retracement. So what I'm telling you is a break below 13,800, then you're going to start getting people giving up even on the NASDAQ 100. And when that starts to happen, that's just going to cascade the other markets lower, whether it's the S&P, the Dow, the Russell. I'm not going to take you through the Dow today, but I did want to show you a couple of these markets that I think are very, very important. You know what else is important before we get into currencies? You have to be watching crude oil. Crude oil continues to find buyers around this 38% retracement. Earlier this week, if you were listening to the Face show, we talked about it being in its sandbox. Its sandbox is between 90 and 81.50, basically right here. You can see it. I would be buying dips based on what is happening in the Middle East right now, because the risks of some sort of energy squeeze, if tensions in the Middle East continue to intensify, and you start to see other actors, meaning i.e. countries or militant groups, participate in the what's happening between Israel and Gaza. If you start to see more action like that, the risks are that the energy markets will see some upside, right? Because you might have some energy disruption. So whether you're looking at crude oil, whether you're looking at natural gas, those are just things you should be keeping an eye on, alongside of other things that are moving in the market, like the volatility and what's happening in the S&P and what's happening in precious metals, all those types of things. So just keep an eye on crude, because crude, as we've discussed all week this week on the free shows, that dips should be bought, especially while you're above this 81.50, 81.30 low that you see right over here. And you can also see it coincides with a 38% retracement. So that's a really big support. And while the market is supported, you have to think that tensions are probably still running really high in the Middle East. It's one of the things that suggested that why we looked at stocks being at the lows of the week. And let me take one step back when I talk about the S&P, and let's not forget that, we probably have some further to go, but did you realize that we closed on the lows of the week, despite all of the pretty supportive data for the U.S. economy and earnings that we had throughout last week? We still closed on the lows. When things fall, when they should be going up because of data, that's not a bullish sign. That's a bearish sign, right? So just keep that in mind. All right, let's talk about what's happening throughout the course of the week, and I'm going to start off with what's happening in Monday. Well, it's actually Sunday night. We have Australia retail sales. Now, Australia, I have to say, the Aussies held up pretty well, It's not going down. But if you haven't looked at copper, copper actually acts really well too. Can I really answer why the Aussie looks so well? Well, for one, the RBA. Let me get rid of this. Let me get rid of this wedge. Well, actually, I'll just keep the wedge right here. The RBA continues to be relatively hawkish. You have RBA's Bullock, just she's seems like she's pretty hawkish, and she wants to make sure that inflation is squelched. And so the issue that we have here is if things continue to worsen in the Middle East, it's going to eventually weigh on growth. And if it continues to weigh on growth globally, it's going to eventually affect the Aussie. But it's been shielded for the most part right now. My colleague K-Man, he says it's maybe one of those currencies that's furthest away. Its bed is furthest away from what's going on, which makes a lot of sense too. Meaning that it could be somewhat of a safe haven currency at this point. What I would be watching is the 62.70 level, because if that breaks, the next target would be 61.80, and you could start seeing those match lows. Then, if you're a bull, you definitely don't want to start to see below those levels, because we start going below those levels, and next thing you know, you're doing a real big meltdown of a longer term triangle. So again, this 61.80 is the 161% extension, and beyond that is 61.50 roughly. And look, if you are bullish and you think, well, the Aussie's eventually just going to break out, I would let it break out of this descending channel. Let it break back above, what is that, 64.50? Yeah, let it break above there, because if it does, believe me, it's going to do some squeezing. And I'd rather be more confident that it's actually going to squeeze and really start to squeeze. Maybe things get a little bit better globally, than get caught, on the wrong side or buying into resistance. All right. Again, on Sunday night, we have Australian retail sales. So that could affect the Aussie dollar. Also on Monday morning, we have German and Spanish CPI. We have preliminary German GDP. So let's take a look at the euro dollar. And last week we talked about the euro being so critical here at the 106.30. So I'll just tell you this. I was short the euro. I was short, 106, I think. And I got stopped out when it moved above 106. 106.41, I think, is where I got stopped out. Something like that, right around there. And as you can see, it ripped higher towards 107 and then it reversed. Now, one of the things that we looked at live on our shows are like, okay, well, maybe it's developing a flag pattern. We've been talking about this pattern all week, and it does look like a bit of a flag. It is outperforming right now. And remember, the ECB meeting was just this last Thursday. I would be concerned if we start breaking back below 105. If we start getting below 105, we have to start thinking about a resumption of trend lower. The thing is Europe is not insulated from all of this that's happening in the Middle East. And I think that, people do realize that when you're talking about the euro US dollar, you actually have to take a step away from what's happening in the Middle East and go, the Eurozone growth is really slow, and U.S. data continues to be much better than even we all expect. Which we have non-farm payroll week this week, so we'll talk about that here in a second. Anyway, if economic data in Europe continues to weaken, just watch the euro, because we might have a resumption of trend. And if you're looking at a flag pattern like this, whether your flag pattern's drawn like this or whether it's drawn like this, it points to either 102 or 98. I think if this played out, I think it's maybe even below that. 98 cents. If the long-term flag wanted to play out. I just wanted to point out that we do have some flag patterns that are developing. Flag patterns are continuation patterns. So that means, the risk is starting to build that we do break into new trend lows. You start forecasting on how far it can go. Those are scary levels. And then if you think about what that does to the dollar index, that puts the dollar index a lot higher than where it's at right now. All right, and then we get that dollar wrecking ball effect in the markets. All right, continuing on. On Monday night, this could affect the Aussie. I just need to mention it. We have China PMIs, but it's Monday night in Australia, in North America. It's actually Tuesday morning. It's Tuesday morning in China. But the big event that'll be right around the same time is the BOJ decision. Now, I did blog about this at the very end of the week. So if you look at the Forex Analytics blog, let me go ahead and get to it. So you can see the blog. It's free if you guys want to see it. It's called the Edge Chart of the Day. Do you know what EDGE stands for? Just so you all know. I mean, it needs to be explained on the site, but do you know what EDGE stands for? I'll tell you a story. When we were doing business with a Chinese firm trying to expand into Hong Kong back in 2004, 2006, that couple year span, the company that I was with, that I was the chief analyst for, we had our Chinese counterparts, and the gentleman that I was doing analysis with every day, he's like, we should instead of calling it an edge, a chart of the day, you should call it an edge chart. And I'm like, what does edge stand for? You know, besides having an edge, he's like, every day a good example. So there you go. That's why we call it the edge chart of the day. Anyway, on Friday, talked about the US dollar Japanese yen and talking about how it's poised to retrace. One of the big things that happened on Friday, and in case you missed it, is there was an article, a headline from the Nikkei saying that the BOJ is expected to adjust inflation forecasts for 2024 to 2%. Now, if you recall last week's week ahead video, I said, hey, don't worry about Tokyo CPI, don't worry about Japan CPI. That's not going to be a real big deal. But the following week, which will be this next week, you know, this was last weekend. So I was like, the following week, we got to worry about the BOJ adjusting inflation forecast, which is a big risk during the BOJ on Monday night, Tuesday morning, if you're in Japan. So it's Monday night for those of us that are, in North America or in the Americas. So just keep that in mind. Now, one of the big risks is if they adjust inflation forecasts for 2024, that means, and they're adjusting it to, let's say, 2%. What they might also do is they might adjust and tweak their yield curve control. And if they make that a little bit wider, they adjust that band wider, that could really have an effect on the yen. Now, one of the things about the US dollar Japanese yen, if you look at it, we've been struggling around this 161% extension of this, this move here. You can see there's their 161% extension. That would be a butterfly pattern for those of you that don't know harmonics. So what we did is we actually hit a new high, probably stopped everybody out, above those highs, and then we reversed on Friday. Now, here's the thing. That's a nasty reversal. And what I would be looking for at this point is if we start taking out some of these lows, because if we start taking out some of these lows, that means we're making lower lows. And if we start making lower lows and then, having lower highs, that means, any type of, following rally just falls short of highs. That means there's a potential trend shift as we hit a key Fibonacci level. And really, we're just, for all intents and purposes, we're struggling around the run 50 level. You know, what's really interesting about that is it seems to be without Ministry of Finance or Bank of Japan intervention at these levels that we can tell. Anyway, keep an eye on the US dollar Japanese yen because the BOJ could be a really big market mover and have a lot of implications for the rest of the market. All right, continuing on. Tuesday, it is month end. Don't forget that. It's also Halloween for those of you that celebrate Halloween. We do. Anyway, happy Halloween for those of you that celebrate that pagan holiday. Just can't. I don't need to go into what Halloween stands for. And I'm joking. It's more of a Saturday morning for me, guys, gals. I got to smile a little bit too. All right. So anyway, hope you enjoy Halloween. I'm gonna get a lot of candy. I'm gonna steal I'm gonna steal all kids' almond joys, or I'll just buy a bag of chocolates and I'll keep the almond joys. That's what's gonna end up happening, and then I'll hide them in my back of the cabinets so no one can find them. Although no one cares. I think I'm the only person that actually likes almond joy, but that's all right. Who's keeping score here? All right, let's continue on. We have Eurozone CPI. So again, Euro is going to be in focus. We have Canadian GDP. Now, one of the things about let's stop here and talk about the dollar CAD. Obviously, we broke out. You guys can see that, right? Clearly, we're breaking out. Finally, it's like it feels like we're letting loose, and one of the reasons why that we've felt that the dollar Canadian was really struggling to break higher is because everybody was playing into the crude. Well, crude is rallying, because of all these tensions in the Middle East, so we can't sell Canadian dollars. Well, if we have Canadian GDP on Tuesday, and we also have Canadian jobs report on Friday, there is a risk that we actually take out the 140 level if data weakens in Canada. Now let's just look at technically what's happening here, because Dale, our host on the Face Show, he said, hey, we got a 3 drive here, 1, 2, 3 drive divergence, but it's not divergent anymore, because you can see, oops, let me go ahead and make this a little bigger. You can see we're actually breaking higher in relative strength, and so that is in essence confirming this high. Now, does that mean you should be buying the dollar Canadian here? Selling Canadian dollars, buying the dollar Canadian? I don't know. It's a bit of a risk, right? It is a bit of a risk at this point, especially when you look at, sentiment. Sentiment is actually getting towards extreme, meaning bearish Canadian sentiment, but that doesn't mean that we can't stay bearish and sentiment can't stay extreme. I would tell you if I was playing on I happen to be long the dollar Canadian. Most of you all know. If you're in the Forex analytics community, you already know that I'm long the dollar Canadian on this breakout from like the last couple of days. But the question that I always have to ask is, would I want to be on the short side of this thing? If I was short, how would you feel if you were short the dollar Canadian? If you went into this weekend short the dollar Canadian, you're probably not sleeping too well, right? So who's got the upper hand? The bulls do at this point. That doesn't mean it's going to stay that way, but that's kind of the way you should look at it when you're discussing or thinking about risk management. All right. So anyway, you look at the dollar CAD and you look at, where we're breaking out from. This could target up towards 140, maybe even 140.80. We obviously have these highs that we need to contend with over here that come in right around the 140 level. But there's going to be a lot of barriers around that 140 level the closer we get. So just keep that in mind. We have Canadian GDP. Also on Tuesday, we have US ECI, which is Employment Cost Index. Market's going to be focusing a little bit on on that data because, market's still focusing on inflation because the data continues to be red hot in the US, considering. The ECI or Employment Cost Index, is an inflationary read. And it's, a read that I think a lot of economists will be looking at. We also have the House Price Index. We have Case-Shiller House Price Index. We got Chicago PMI. We got the Consumer Confidence Conference Board Consumer Confidence numbers, which, again, the American consumer seems to be holding up really well. But what is their read going into this economic or the strong data that we're getting, and the recession risk, or the consumer still holding up? We'll see. Also, just on Tuesday, we have U.S. dollar Mexican peso. Now, I still think the U.S. dollar Mexican peso is at risk of breaking 1850, but you can see we're making even slightly lower highs here, because you get sellers that are just piling in as we get towards 1850. But we have Mexican GDP on Tuesday. We also have later on the week, or I think it's actually the next day, we have Banxico, a survey, and so the market wants to know if Banxico in their survey is going to adjust growth forecasts. So that's one of the things that the dollar mex is dealing with. But you can see the support is the 200-day moving average. The resistance is 1850. We've talked about that several times over the course of the last couple of weeks. So 1850, a break above that is obviously very bullish. Now, at the end of the week for Mexico, they do celebrate their what is the name of the holiday? But it's the Day of the Dead, basically, where they're celebrating their ancestors. So it's a bank holiday, so things might slow down a little bit towards the end of the week if you're dealing with the peso. All right, on Wednesday, or Tuesday morning, really, on Wednesday, we have New Zealand employment. Now look at the Kiwi. Look at how bearish it is. I mean, compared to the Aussie, like the Aussie's holding up, right? Kiwi, not so well. It just cannot break back above this resistance zone. And so that means this bear flag pattern seems very doable at this point. Oops, I didn't want to do that. Let me fix that. So, when you start looking at targets of a bear flag pattern, that challenges those lows from October of 2022. That is a bit of a risk when you're talking about the Mexican peso. Next support is going to be 57.30, which is a 78% retracement of this entire move. New Zealand employment, again, is on Tuesday night, Wednesday morning. On Wednesday morning in the U.S., we do have ADP, the ADP jobs data. We have ISM manufacturing data. Remember, we won't get services data until next week because of the way that the dates fell this at the beginning of the month. Since the beginning of the month, the first Friday of the month, we haven't had a lot of data. A lot of days of the month. We will get the ISM services data the following week. But we should look at the dollar index because the dollar index continues to be really freaking strong. And I mean, I know this is the opposite of the euro, but again, let's ask yourself right now, if you're short dollars, and some of you may be, how difficult is this for you to be short, knowing that we are consolidating with very shallow pullbacks above the 50 DMA, that's the orange line right here, above the breakout point in a flag pattern. Like, again, if you're short dollars, you're going, it's a tough trade, right? It's a tough trade. So that's why this economic data this week is going to be so vitally important, because you got, jobs report, ADP, you got, the employment cost index, you've got JOLTS data that's coming in on Wednesday. Then, and I forgot to mention this, what else is happening on Wednesday? Probably the most important thing of the week. Now, I know a lot of people will say it's going to be boring this month. We have the Fed actually on Wednesday. So why is the Fed a big deal? Because no one's expecting the Fed to move on rates this month. Because the question is, will they set the stage for more rate hikes moving forward? Because this is, the November meeting. A lot of people thought, hey, maybe the Fed might actually raise in November because, what's happening in the Middle East now, expectations have dropped to basically nothing. But will they leave the door open? And if they do, and Fed Chair Powell doesn't shut the door on further rate hikes, you could see the dollar really scream higher. So remember, despite everything, this crazy world that we're living in, U.S. economic data continues to be very hot, and that's making the Fed's job in fighting inflation very difficult. So as this persists, the Fed has to keep that door open. The question is, how hawkish will they be? How hawkish will the Fed be? The Fed chair, will he sound during his press conference? So Wednesday, FOMC, big deal. Probably the biggest, I think the biggest event of the week, because I think it's, we all know that there's not going to be a rate hike. It's how hawkish will the Fed chair be? Because it's, you could say, and if you're the Fed chair, you can say, okay, I see the risks in what's happening in Israel, in Gaza. I understand the risks, but I'm looking at backward-looking data anyway, and it's still pretty damn strong. And it doesn't seem like U.S. economy is really, substantially slowing, which I need to happen. And I can't just assume that things are going to get worse in the Middle East. Let's just, if you're the Fed, you got to keep a glass half full type of point of view that hopefully cooler heads will prevail and there'll be, peace talks and things will subside. Then I have to deal with a hot economy. So I have to leave that door open, right? That's, I think, the approach the Fed chair has to take. So anyway, things that we need to be thinking about as we go into towards the end of the week. Thursday, we do have Swiss CPI. Now, the Swiss franc has had a nice bounce. This is, by the way, this is a 50% retracement. You can see it right here. The Swiss franc has had a nice bounce. There's a few traders in our chat room really taking advantage of the bounce from the 50% retracement. Also, horizontal support you can see right here. The Switzerland does have CPI on Thursday morning for those of you that are trading the Swiss franc. Also, we have the Bank of England Thursday morning. Even though everybody's expecting the Bank of England to leave rates unchanged, and the vote will probably be 6-3, something like that for in favor of hold. But does that vote shift? And if you're looking at the cable here, in my opinion, it's a bearish wedge. And if it's a bearish wedge, that means there's a higher propensity for a downside break. Whoops, that's not what I wanted. There's a higher propensity for a downside break than an upside break. There's maybe a 30 to 40% chance of it breaking higher, where you have probably a 60 to 70% chance of it breaking lower at this stage, based on what we see. So if the Bank of England, if some of the MPC members they vote dovishly, maybe it's more than 6-3 that want to keep rates on hold, you might end up having a sterling that gets hit. A move below 120.50 would be a pretty bearish event. So just keep that in mind on Thursday. Last but not least, I wanted to cover for you because we have the jobs report, right? We have the U.S. jobs report. We have the Canadian jobs report. Some of you are going to say this is the most important data of the week. I actually think it's going to be the Fed, but we also have to keep in mind that the Fed is also data dependent, and the jobs picture, you see unemployment claims, they continue to be so low. And that's been, for me, very surprising, which is, again, U.S. exceptionalism as far as data goes. So the jobs data is going to be really important. And, how the market reacts to it is going to be, I think, pretty binary. But before I talk about that, I need to say, if you want to take advantage of, this data and it releasing and the market's really moving, and you want to be involved in the Forex analytics community, you should try to take advantage of the trader funding program, because this way you're not risking your own money. Right? Why risk your own money, and why trade a smaller account when you can trade a larger trading account? If you want to learn more about this program, watch the video. Okay. I also have a video in there that shows you how I passed an assessment. Take an assessment. See if you can actually qualify to trade a $25,000 account, or a $500,000 account, or $1 million account, or a $250,000 account. You have an unlimited time to take an assessment, and while you're taking an assessment, for a certain period of time, you're allowed inside the Forex analytics community. Download the mobile app, talk to me every day, talk to other team members in our chat rooms. So this way you're not trading alone. So, and then you have a bit of an edge when you're having our analysis with you throughout the course of the trading day. So anyway, check out the trader funding program, because that's a great way to take advantage of, like, the jobs report that comes out on Friday. So with that being said, You have the jobs report, and I'll just pull up the euro as we discuss this, and we'll go into the Canadian too. U.S. jobs report, we're expected to create, 180,000 jobs, but that was after beating expectations and coming in with 336,000 last month. Now, remember, everybody's going to be watching revisions as well, but it's, like I said, it's pretty binary. Strong data means good for the dollar. Weak data is bad for the dollar. Pretty simple. How equities respond, it's not as clean, in my opinion, because the market is worried that if the data continues to look strong, especially getting a look at the FOMC just 2 days before that, everybody's probably going to walk away from the Fed saying, okay, they are data dependent, and whether the Fed continues to hike rates over the next 1 or 2 meetings has more to do with how strong this data is. So if the data continues to be strong, the Fed may keep rates higher for longer and possibly even raise rates again. If that's the case, the stock market might not like strong data. So it's hard to really say how the stock market's going to react. But like I said, the equity markets are really binary. When you're talking about Canadian data continues to be really strong as well. I mean, you look at last month, Canada created 63,000 jobs. And I know some of you will say, well, but the part-time jobs, full-time employment, I understand that, but the market's trading off the headline number. Canada is expected to create another 25,000 jobs. And remember, the dollar Canadian is threatening a breakout. So if you get strong data out of the US and weak data out of Canada, then you got a double whammy where the dollar Canadian is now trading well above 140, and we're all scratching our heads going, oh my God, do we buy it up here? That's a risk. So anyway, it's going to be a very busy week. And let me just say this, if you enjoy these videos, you think they're great for you as far as preparation goes, make sure you give myself, the team, a big thumbs up for getting these videos out for you. It is Saturday morning for me. Hopefully you're watching this, before your week starts. And I have to say, if you are a Arizona Diamondbacks fan, yesterday was a tough loss for game 1, but that's all right. Game 2 is coming right around the corner. Anyway, I want to thank you all for spending your very valuable time with me. I appreciate it. I don't take that for granted. So I appreciate you. I'll see you on the Monday morning Face show. But don't forget, we also have the Flow show in Europe. Tune in there. And thanks for listening in. I'll see you guys on Monday morning. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.